This is where it starts to get interesting and you get some real historical data here from us. So here at Buckingham, we have been doing our own local market research since 1965. And what you're looking at here, it's kind of hard to read, but you can download this from our website if you want. This is 55 years of apartment building values in Southern LA County. We call this the Greater South Bay, and the geographic region that's on this chart goes from about LAX, Inglewood area, down through Long Beach, all the beach cities, the Greater South Bay cities like Gardena, Hawthorne, Lawndale, those types of areas, San Pedro. And this is just price per square foot on 2 units and above closed sales going back to 1965. So in 1965, we're at $14 a square foot. In 2020, we ended at $422 a square foot. Not too bad. If you just average out all of the business cycles, the real estate cycles here, that's an average rate of appreciation on the value of properties of about 6.4%. And so obviously real estate is susceptible to, changes in the markets and the business cycle, but the important thing to remember looking at this chart is every time we have a downturn and then we have a recovery, we always surpass our previous high. So, just charting this out for a minute, early 1980s downturn, strong recovery, early 90s downturn, that was a bad one, subprime boom up until 2007 at 329 a foot, subprime crash down to 205, and now raging back up to 422. We've just gone through a global pandemic that seems to be in its final months, hopefully, knock on wood. And real estate is doing really well, especially multifamily, because everybody needs a place to live. And people were actually pretty able to pay the rent throughout the pandemic as a result of a lot of other factors that we could get into on a whole nother presentation. So another interesting thing looking at this chart, though, is real estate is not necessarily tied one-to-one with the stock market or with the economy in general. There's a missing cycle here in 2001. We had the dot-com bubble burst, we had the 9/11 attacks, and real estate just kept going up because what was going on in the stock market didn't really affect the real estate values here in Southern California. I think that's kind of analogous to maybe what might be in our near future here in the country, depending on who you ask.